Hi everyone. Today let's talk about how to invest in an election year as we get close to the new year. Then we'll look at sentiment, the calendars, then we'll get into the charts, as well as my results for the week and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So in terms of seasonality, we are headed into an election year, so let's take a look at what they're saying about that. They say historically investors choose to park their money in lower risk investments due to the volatility that comes around election years. Healthcare and energy sectors tend to be a little bit more volatile in the years before elections, and they mention about 40 national elections on the calendar for next year, so there is a large amount, not just the United States, going into election years, which again is going to affect global markets. They do mention that cash is tempting, but not always the best choice. Historically, people push into equities in that first year, get a bit of a slingshot early in the term, and then as we get closer to that presidential election year, people are mostly in cash. That's not necessarily the best move, and we'll take a look at the data they're saying here. In terms of sectors, you can see that energy, financials have the most volatility based on this chart. Healthcare a little bit, but what you notice here is that the 1 year after elections is typically better than the year before elections, especially when it comes to energy, financials, and even the S&Ps. Typically the year after elections is the more bullish year. Information technologies can go either way, so not everything is better after election years, but in general it does look a little bit better. They do mention that the U.S. economy tends to be strong and the markets bounce back regardless of who wins the election. And then in terms of seasonality, they do mention that in non-election years, the primary period is typically a little bit more bullish. And then once the primaries are complete, even during election years, markets tend to move higher after the primaries are done, because at that point, then we generally know at least who's going to be competing for the presidency in most of the major elections. But in the primaries, there's a little bit more risk. And then looking at both of the political parties together, in general, market goes higher over time regardless of who is in power. Obviously, there are times like right at the end of George Bush here, 2008 style crisis, and then once there was a bunch of money injected here, we did move higher. And you can see we peaked out right at the end of Clinton, so rough couple of years there. But in general, everything tends to go higher. And then regardless of seasonality, you always have to factor in economic trends. Economic trends are going to overrule the election cycle. The election cycle just adds a little bit of volatility to that. And then finally, they mention here, Goldman Sachs is saying that everything is going to be fine in 2024 as well as it did in 2023. And the investment bank continues to see income growth for U.S. workers and an eventual decline in interest rates, which should allow stocks to be profitable over the next year or so. Moving over to the AAII Sentiment survey, you can see we are still very, very high on the bull side. Lots of bullish sentiment for the next 6 months, much higher than the historical average. Not quite at a 1-year high, but still very high. It's higher than it was last week. You can see up almost 2%, and it has been trending higher for 3 weeks in a row here, quite bullish. And then on the bear side, again, continues to step down from last week, also well below historical averages. And interestingly here, we have the neutral sector basically at the historical average. Interesting. We're going to take a look at the charts. It does seem like momentum is starting to fail at least a little bit, which makes sense as you have neutral sentiment expanding here from last week. Moving over to the fear and greed index, you can see we are well into greed now, up at a 68. That is 10 points higher than we were a week ago, and 1 point higher than we were from yesterday. And you can see we were at a 33 1 month ago, so almost in extreme fear. And now we have swung to the other side of that pendulum, deep into the greed sector. You can see here market momentum, definitely in extreme greed at this point. We dipped below the 125, swung back above it aggressively. Now we're seeing that move into other things. Stock price strength into greed here. It was not there last week. Stock price breadth getting into greed. That's a little bit more arguable. We'll take a look at the breadth charts later. Put call ratio very low, down at that 0.8. We'll take a look at that one as well. Back into extreme greed. Market volatility definitely neutral. Took out these lows. We talked about that on the Friday video. Safe haven demand continues to be in extreme greed. People not really demanding those risk premiums. And then junk bonds in neutral here, back above that 92 level. And we'll take a look at that on the J and K charts later as well. Moving over to economic calendars, you can see building permits at 8 o'clock on Monday. That'll be interesting. New home sales at 10 o'clock, also going to be interesting. Tuesday, not much. You do have consumer confidence. That can be interesting. 7-year note auction. That's always good to watch with interest rates driving markets right now at 1300 on Tuesday. We also have GDP numbers at 8:30 on Wednesday. Those will definitely push markets around. They also tend to be a little bit more impactful in the IWM versus the NASDAQ. So that'll be interesting there also. And then looking at Thursday, we have PCE numbers for the United States as well as CPI numbers for the Eurozone. That could drive markets at least a little bit. FOMC members continuing to talk, pending home sales at 10 o'clock on Thursday. And then looking at Friday here, we have ISM manufacturing PMI. You can see these previous reads were well below that 50 mark. You want to see those go higher if the economy is going to stay strong. If these continue to dip too low, that could say we are leading towards that recessionary environment. And then it mentions an 11 o'clock talk here from Jerome Powell. You always have to pay attention to that. We'll see how that does. Then we have Atlanta Fed here at 11:30 for GDP. Moving over to Max Payne, still sitting lower than current price, 445. We've been lower than price for a while now, so that doesn't seem to mean very much. It is interesting to see how high this call wall is here relative to everything else. So 455 seems to be fairly heavily defended. Top of the puts sitting up at 457, 458, right in that range. But that 450 call wall, definitely interesting. Something to watch there going into this week. Not a ton of options, only 729,000, so not a huge impact, but just seeing that massive call spike does seem interesting. And to me, that's a slightly bearish indicator. Moving over to the charts, starting off with the S&Ps on the weekly chart, you can see we've had 4 really strong bullish weeks in a row. Surprising, I thought we would see a little bit of a stall, but once we got above this trend line, you would expect to move to the next one, and that is what we got. Momentum still looks clean here, 4 weeks in a row. Could see another 2 weeks or 3 weeks on this momentum. It is worth noting we didn't see a lot of volume on this week, which makes sense. It was a short week. Also with the holidays, makes sense. If this level breaks here, though, in terms of trend, there is not a lot of resistance until we get up to next trend, up around 47.60. That would be interesting. And with momentum, it does seem possible that we could get into that range over the next 2 to 3 weeks. We do have some clear resistance that we're going to see at the highs here from 24 July. That wick high sitting around 4,600. That's going to be clear resistance. But besides that, there's not a lot of resistance until we get into that next range. And that trend line does coincide here with the all-time highs going back to January of 22. So definitely an interesting correlation there. And then for my higher trend, that is going to be all the way up around 49 to 49.50. And that would be an all-time high if we did hit that trend. Moving over to the daily chart here on the SPY, you can see that daily momentum continues to step down. We've been stepping down pretty consistently for several days now, but the market continues to melt higher. This is a melt up, and that is the characteristic that I look for in a melt up. Price going higher as momentum continues to slow here. And we are right at this trend line. Definitely interesting, right at that 455.47 level. If it gets above there, I'm watching 457.57. Above that, I have 463.70. And that would mean that we took out the high here from that 27 July. So next level for me, right at that high, and then to the downside, 453.07. And if that breaks, then we have 448.47, as well as you do have to factor in that once support levels start to break, all of the longer term EMAs are sitting down around this 437 to 433 range, which means there could be a lot of downside before we find substantial support. I do expect that we will find some support in this zone at the lowest, establish a higher low, and then rally through. But this has been a dramatic about 11% move over the last couple of weeks. And eventually we need to see a more substantial pullback, even in healthy rallies. Moving over to the NASDAQ on the weekly chart, you can see we have already taken out that peak on a closing basis. We wicked well above it, and now on a close, we are above it also. Momentum continues to tick towards bullish. Go ahead and extend these trend lines out. You can see that first trend line sitting around 16,324. Next one sitting around 16,750 or so. And if those break, we would end up around 17,400. And you can see that would also be above those all-time highs All-time high is currently sitting at that second trend line around that 16,800 area. So if we did get there, that would be all-time highs on the NASDAQ. It does seem possible. Again, I don't think it's going to happen in a straight line. I think we do need at least one pullback, and we'll look at that on the daily chart. But again, the structure looks clean up into those areas. Moving over to the daily chart, similar to the SPY, you can see momentum continues to tick down consistently. Days have continued to trend higher, not quite as cleanly as the SPY. 3 days in a row have been basically unchanged. Big up day on Monday, gap down, gap up, wick high, rejection, gap down. Not a great setup for going higher, especially with weakening momentum. 9 EMA sitting at 386.35 or so, and then if those levels break again, you got the 21 sitting all the way at 372, VWAP down at 368.84, and this would be the range I would be looking for support down in that highly traded zone around 370. Everything looks okay in that range. Again, momentum RSI looking to break down, in my opinion, hit this range, find some support, and then rally through into those longer term price targets. Moving over to the Russell on the weekly chart, you can see we had another bullish week. 0.58% to the upside. Momentum on the weekly chart, again, like everything else, seems to be ticking in the bullish direction. We got a test of that 55 EMA 2 weeks ago, and then last week we basically held just above my level, 179.17. You can see we're at 179.33. We also tested this trend line here, which marks the bottom going back to October of 22, marks the bottom here in May of 23. Now we're here again testing that level. If we can get above it and hold, that would be a nice indicator. You got the 200-week moving average sitting at 186.13. That would be an interesting level just behind my 185.63 level. And I do think we can get there if we can get through this little bit of resistance right at this 55 and 21 EMAs. Moving over to the daily chart, you can see this consolidation doesn't look super great, but all of these little bear candles have been bought up. Strong push on the Friday session. Again, we closed above that level, testing that trend line. We also have the 200 SMA on the daily chart sitting in that resistance area. If we can get above it here, that would be all of the EMAs and SMAs on the daily chart here on the Russell. Again, looking pretty bullish. You can see this high volume area up around 184. That would be interesting. And then if that area breaks, then you're looking at 189 to the upside, which would be right in this high range from September. And I do think we can get there based on how strong this consolidation looks. The Russell also looks different because we had a rally, pretty strong pullback, test, rally through. Didn't pull back super strongly here, but consolidated. And then if it pushes through again, that looks a little bit more healthy to me. Moving over to the Dow on the weekly chart, you can see another strong candle, 1.25%, one of the strongest out of the major indices right here. In terms of structure, we're still below this end of July high, but we are above my level here, 353.62. Next one, 356.48, which is right at that high from July. If that breaks, 359.27 could be your next level. Momentum still looks clean. RSI looks clean. No change really here in terms of the thesis. And then moving over to the daily chart here just for a moment, you can see this has been consistently rallying above that level, right at this. Next level is that July high, which you can see here. Does make sense that we would get into that range at this point. Momentum actually ticking down slower than the other major indices. RSI making another new high, so no divergence yet like we're seeing on some of the other major indices. The Dow looking like the strongest of the group as we go into next week. Moving over to the equal weighted S&Ps, another bullish week here, almost 1%. Momentum still looks clean. Everything still looks good here to the bull side. Got the 144 week moving average sitting at 147.60. That's going to be some resistance. And then above that, I have 149.82. Again, similar to the Russell and the Dow where we had a bullish week, slight pullback, bullish week, continuation this week. And I do expect to get to that 149.82 level, but I am expecting some resistance at that 144 EMA, which does coincide with this consolidation lows here going back to 17 January, and then a very similar level here in 21 February, as well as the high here going back to the 12 September week of 2022. And then moving over to the daily chart just for a moment, you can see we've had a consistent melt up, continuing to make bullish days. Momentum continues to fade, not overbought yet, which is good. We're right at that highly traded zone. You can see that's going to act as some resistance, but if we can get above that, again, I do think 149.82 is a reasonable level to target, which does mark the top going back to 16 June, very close to the top here on 3 July, and then we did interact with that same level here in August, and once again, it is the price target here in the short term on the equal weighted S&Ps. Moving over to the ratios, we have copper divided by gold to start here. We did get a very slightly bullish week, 0.42%, not nearly as strong as the previous at 1.76, but again, again, that's 5 weeks in a row of bullishness. Momentum ticking towards bullish. Did see a clear wick rejection on that 21 EMA, but that doesn't mean we can't go higher. We still closed in the green on the candle, which is good. Highly traded zone at 1950. Want to see this push at least to the 55 EMA, up around 20 on this ratio. As long as the ratio is confirming rally, that should be good. And we've seen longer term rallies like this from July all the way here to February of this year, and then we ended up giving all of that back in a short period of time. So you do have to factor that in. This is still overall a downtrend, but we're seeing at least a shorter term rally on the copper versus gold ratio. Moving over to SPY Russell and NASDAQ SPY, you can see SPY Russell slightly green on the week. I am expecting this to fall again next week, meaning that the Russell should outperform in my opinion. Big tech stocks are kind of topping out in terms of momentum in the short term, which should give the Russell a little bit of chance to outperform in that same shorter term. And then on the NASDAQ SPY, not really doing much of anything. Did have a little bit of a swing higher, but we did have 2 bearish weeks in a row, which is interesting. Momentum basically zero. This could go either direction. We could get a resumption up to 355 or pull back to 343 at this point. Still a bullish trend, but 2 bearish candles in a row does mean that this could pull back a little bit more going into next week, which would mean the NASDAQ is underperforming the SPY and big tech is not leading us higher, at least in the short term. And then moving over to SPY divided by the M2 money supply to finish up the ratios, you can see we hit that level once again. The high of the week was 22.06, touching my 22.05 level, and then we did pull back from that. If we get above this and we can hold above it, that would be interesting. Then who knows where we're going to go. Last time we held above this level was the dot-com bubble, and you can see that here going back to May of 1997. We did get well above that level, rallied up super aggressively, made a huge topping formation, and then we pulled back really massively all the way down to 13.9. So the main thesis here is that we do not get above 22.5 and hold above that level for any length of time. We have not done it in history. The only time we've been above it for any length of time was that dot-com frenzy, and you do have to factor that in. Does not mean that we can't get above it now and then rally above it for an extended period of time. That did take several years for that to come back, and we did go much higher in the short term. So it doesn't mean that we can't get up there, but historically over the recent term, we have not been above it. Tested it pre-COVID, tested it all-time high, tested it here in July. We are testing it once again here in November. And if we pull back from there, this 22.05 level has been a strong historical level. We do have to pay attention to that. Moving over to Apple and Tesla, you can see Apple absolutely dojied 0.15%. Did wick a high, didn't do much after that. Momentum still bullish, you do have to factor that in, but RSI went flat. And then Tesla has been moving in this downward channel, tested that high, pulled back from that level. Does seem like we're going to pull back some more from that level. Momentum, it did step down slightly, but not very consistently, so not super interested in that. You can see we had a similar move at the previous high here. Tested that level, small momentum, didn't really do anything, and then we started to fall and momentum went bearish again. Does seem like that could happen here. Overall, the trend is still not good on Tesla, but I do want to take a look at the daily chart here on Apple just for a moment to give you a little bit better perspective in that fading momentum that I've been talking about. You can see super aggressive, confirming the rally, everything looks clean. And then we've melted up here, started to roll over a little bit as momentum continues to tick down. Once this goes bearish, that's going to be a big indicator. You can see RSI also stepping below that SMA. If Apple starts to roll over, that tends to mean that markets are going to move in that same direction, at least for a little bit. And then you can see the 21, 144 VWAP all sitting down around this 180 range. Moving over to staples and discretionary, staples rallying up. Continues to outperform, bullish momentum, everything looks clean, small volume, not great. You want to see RSI get above the 50 line, that would be interesting as well. Overall, this still looks pretty clean coming off a solid base. Discretionaries, on the other hand, still a bullish candle, 0.66%, but it's definitely coming into some resistance around this 169 area. That's the wick lows here from July, as well as the low here from this candle close on 5 September week. So definitely showing some resistance in this area. Again, this is one of those ones on the daily chart. You can see we've had many days of consolidation at this level. Momentum fading, does seem like it could pull back, whereas staples continues to look very strong, closed on its high, does look clean to the upside. Moving over to semis and oil and gas, you can see semis had 3 really strong weeks in a row. Finally got a bearish week, down 0.5%. This was a new all-time high on that wick high, so I added a level there, 165.27. We'll see if it can get above there. It is holding at trend right now. Next higher trend for next week would be 169.76. That would be super bullish. Momentum bullish. I don't know necessarily if it can do a new all-time high with Nvidia pulling back a little bit on their earnings report. Wasn't super bullish on their report. And then you can see oil and gas continues to show weakness. Oil has been very weak. Momentum bearish, RSI bearish. If it takes out this 135 level, quite a lot of downside to that 128 area. Moving over to financials and transportation, you can see financials have had 2 really strong weeks in a row. 1% last week, 3.24% the week before, bullish momentum. We are at the 144 EMA as well as my 35.43 level. If that level breaks, 36.90 is the next level at this high going back to January of 23. Financials look really clean right now, to be honest. Everything looks good to the upside. And then looking at transportations, again, this is following suit with the Dow, so confirming that Dow rally, really strong moves, momentum ticking towards bullish. RSI looks clean. Trend resistance sitting at 247.93. If we can get above that level, I have 251.77 right at this pivot high from 28 August. And everything looks clean on both of these to the upside. Moving over to breadth on the 50 and the 200, you can see 50 continues to look bullish. 200 day coming into resistance at that 200. We haven't touched it yet, which means there's a little bit more upside to come before we hit that resistance. I do think it's going to happen though at 56.34, and that would correlate with a touch of 77.46. That could absolutely happen. If that level breaks, then we're looking at these previous highs around 89, or even this longer term top here at 92.25. If we do hit that level, I would suspect that this is done in terms of a rally. We need to see a much more significant pullback from that higher peak here on the 50-day average. Again, 200-day average not showing much pullback yet. Bullish momentum at a clear level where we should see a little bit more push, and then some rejection from that 200 SMA. Moving over to yields just for a moment, I wanted to highlight that this did break out on the 10-year, 2-year showing strength, which does correlate with a little bit of a pullback momentum on both of these ticking towards bullish, which should be a little bit bearish for equities. Moving over to the dollar on the weekly chart, we got another bearish week, 0.39%. We are not quite to my level, 102.98. I do think we're going to get a test of that level. We didn't touch it this week, which means we should see a little bit more follow through to that level. It does mark the bottoms on 21 August as well as 28 August on those weeks. And you can see on a closing basis, that was a very important level here throughout June. So if we get into that area, could be an interesting level where we might find some support. If it does break down, we have a shorter term bottom around 102. That could be interesting. And then more realistically, you have trend down at 101.62. And then 101.25 marking the closing bottoms here in May. That could be interesting. If this follows through down into those depths, we should see equities going higher. But this has been a substantial move lower in the dollar without any pullbacks. Doesn't mean we can't continue lower though. You can see this really strong push that we've seen in the dollar with many, many bullish candles in a row before we saw any kind of pullback, and we're seeing that now. Moving over to JNK and TLT. TLT wick this high, pulled back, slightly bearish candle, even with bullish momentum. Interesting. JNK, very bullish week, 0.37, got above trend. Next level of resistance, 92.50. If it gets into that area, I would expect some resistance from there, but momentum looks clean. Everything looks good on JNK to go higher. Talked about how JNK is more neutralized in terms of the fear and greed index, and that's what we're seeing here back into this consolidation. I do want to look at TLT on the daily chart here just for a moment because it does look like the inverse of the 10-year. You can see this wedge that we were seeing, and then we saw that big gap down to the 9 EMA. If that 9 EMA breaks, we should see much more down move in TLT, meaning that yields are going to go higher and equities are probably going to go lower. Moving over to volatility on the weekly chart, you can see we took out all of these wick lows. Next level for me, 1177. We also have trend sitting in that same area. You can see this very long-term downtrend. Go ahead and extend that out just a little bit to see just barely below it for this week, sitting around 11.5. So if we get into that zone, I would expect an overthrow to the trend line, and then that could mark the bottom for this VIX move. Then we could see a consolidation kind of like this, and then eventually see those spikes start to come back through. That's typically how this works. Big move down, consolidation, wicks to the upside. Big move down, consolidation, wicks to the upside. Pretty consistent on that style, and now we're in this zone where we could start to see that establish once again. Moving over to my accounts, you can see I did okay. I was up about $500 on the week, which means I was up about 0.5%. Like I said, that's okay. The NASDAQ was closer to 1% up, but you can see it was down several days this week. And it was down on the Friday session as well, even though I made a little bit of money on that session. In terms of positions, slightly bullish on the IWM, like I talked about, up to 180 for 50 cents credit. I might take a position in financials here. Those do look quite good as well going into next week. And then looking at the Qs, I still have my 400 shares, which is a very heavy position, as well as these covered calls giving me some protection. Right now, I have a 386 for $8.80 credit, which gives me protection down to 378 or 377 and some change. So decent protection there. And then 385 for $12, which gives me all the way down to 373. So lots of protection on these positions while still giving me some opportunity to the upside over the next week or two. We'll see how that plays out. Slightly bullish with a little bit of protection on in case we see more pullbacks. Let me know down in the comment section what you think of the election year coming up. Are we going to see pullbacks during that year? And will we rally after the midterms like we typically do? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.